This episode is brought to you by 180 Markets, where it is our goal to bring every individual, fund manager, family office, or any qualified investor access to Australian Stock Exchange capital raises. If you are ever interested in how to access ASX capital raises in a super simple way, 180 Markets is for you. The sign-up process is easy. You just upload your ID, proof of your investor status, and your current brokerage account information. The settlement of shares goes right into your existing account, and you can access our very next capital raise. If you're interested in free, easy access to thousands of ASX capital raises, including placements, IPOs, reverse takeovers, and more, check out 180markets.com.au. Hello, everybody. Welcome yet again, another edition of 18 Minutes with 180 Markets. Fellow investors, there are certain items that we always look for in investments, and that is what we have today. Firstly, we want businesses that are on trend, and in this case, it's an eco-friendly trend. The second thing we want to look for is a company that has some business momentum already. And again, Range International, and we're going to speak with management in a moment, certainly has that with some very new, unique contract wins. And the third aspect is a company that is just really turning the corner, but already has, as I said, those positive inflection points. And that's exactly what we have with Range and their managing director, Steve Bowhill. And with that introduction, Steve, welcome to 18 Minutes with 180 Markets.
Thank you, Greg. Great to be here.
Hey, Steve, we always start out with someone's background. Can you just explain for our audience a couple minutes about yourself?
Sure, thank you. Well, British originally and moved to Australia 20 years ago, the best place to be. I have been running small businesses and turning around small businesses for the past 18 years or so. Had one success with ASX listed Ideas International. We turned that around and we sold that to Gartner. And then I moved into a business that was associated with a private equity business for another 6 years after that. And that kind of pivoted from power generation, traditional power generation into solar. And so we saw some success in pivoting those businesses. And then I got involved as a non-executive director into Range International before becoming CEO a couple of years ago.
Excellent. And with Range International, as we said, Range is known as a pallet company, but maybe can you explain to the audience pallets, there are pallets and that there are pallets, and yours are very specific and eco-friendly. Can you just explain to the audience about your pallets and what makes them different?
Sure, absolutely. Well, it's a great question. And yes, there's 9 or 10 billion pallets in the world. It's a huge global addressable market. A lot of those are within logistics companies, pooling companies. So the traditional CHEP type of company. Our pallet is definitely unique, as we are one of the only, if not the only, company in the world to make a pallet from 100% waste plastic. So there might be other companies that do a mix of some virgin plastic with recycled plastic, but we go from sort of cradle to grave, if you like, of recycling the waste ourselves, taking the waste into the factory, processing it, and transforming that into a pallet. And that's quite an intensive process, but it does mean that we are able to handle quite a variety of waste. And that is actually where a lot of the large corporates are going with wanting to recycle their own packaging waste. So they have to take responsibility now for there's a producer responsibility code which came into Indonesia, and they want to be able to take responsibility for their waste. And then we take all of that waste and make it into a pallet.
Absolutely. And for the audience that's not familiar with the company, you touched on Indonesia. And to be clear, Range, even though you're an ASX company, your base of operations is Indonesia. And I believe your chairman spent 10 years living up there, and you certainly have operations on the ground.
Yeah.
You touched on what companies want, because obviously it means nothing unless that there's demand. Can you just touch on what companies are looking for these large corporates out of pallets these days?
Sure. There's two main categories of pallet. There's a one-way pallet, which is an export pallet. It generally doesn't come back. It's used to ship goods overseas from a domestic base. And then there is the warehouse pallet. that sits obviously in a warehouse. And in between, you have the logistic pooling pallets. So what customers need, if they're exporting companies, they need a reliable, fairly lightweight, relatively inexpensive one-way pallet. And that has been made from timber in the past. But timber obviously gets infested with, I say obviously, timber can get infested with termites. It can get infested with fungus or things like that. It can find trouble crossing borders. So there is a trend of timber changing to plastic for those applications, subject to cost. And in the warehouse, you obviously want to have a reliable pallet, and you want to have a long life of pallet. And increasingly, we're seeing customers looking at the lifetime value of a product. So they're not just taking into today's P&L the cost of buying a pallet, they're looking at the lifetime value of that product. So that's one of the reasons we're picking up some clients, is because our pallets are long lasting, they are durable, they have a good comparison to timber over that lifetime comparison. And we're also seeing a possible trend, it's starting to happen, of companies wanting to embed RFID into their pallets to track their pallets so they have better control over their pallets. That is only really possible with plastic pallets. And that is, as I say, starting to happen. I'd like to call it a trend. It's probably a bit too early to call it a trend right now. I think it's happened in the US with companies like Walmart using RFID in the pallets, but I think that will actually increasingly happen. And then that enables companies, if they want to send the pallets out, instead of using a pooling company, they might be able to track the pallets themselves and manage the logistics of the pallets themselves, or through one of their logistics operators. So we're seeing that sort of return of pallets and control by the companies themselves.
Absolutely. And I suppose, you talked about trends, what you're seeing. One of the most interesting things we think about Range, and one of the reasons that we're so excited about your company, is that you actually already, the proof is in the pudding. Can you just talk about some of the recent contract wins that you've had with the likes of the Unilevers and the Nestle's of the world? And again, and also maybe to the degree you can share with us the stickiness of those contracts and how how they come about.
Sure. Yeah, absolutely. Well, there is a long sales cycle. That's one of the downsides to changing pallets or changing provider of your pallets. But then clients generally tend to like to have consistency in the pallet that they buy, so they want to keep that provider then supplying pallets, perhaps until a warehouse is full or warehouses are full. So yes, I mean, last year we won Nestle, repeat orders from Nestle through the year in the Philippines for a heavy-duty warehouse pallet. So that's been a long-term contract, and we are hopeful that we will get more orders from Nestle. And we recently announced that the partnership, if you like, with Unilever and their logistics operator for us to provide them a pallet into their raw material warehouses across Indonesia. And that deal itself is combining all of the things I talked about earlier. So it's taking waste from Unilever, and that could be ice cream tubs, it could be sachets, it could be any of their flexible packaging that we've trialed and works into the pallet, and then it includes QR codes, it includes RFID for better tracking of those pallets through their lifetime. And at the end of life of a pallet, what's also good about our product is that we can take that back into the factory in Indonesia, and then we can regrind it and make new pallets again from the waste material. So it is zero waste, and that is it's a very much a used buzzword, but it is a big trend of zero waste. And companies like Nestle, companies like Unilever, they're setting goals of either being 50% reduction in virgin packaging, or 100% of their supply chain will be recycled. You're seeing all of these macro trends come into their goals now and their vision for the company. So they want to use less and less virgin packaging and use more and more recycled.
Absolutely, and that's where range, I think is again, you really can help these big conglomerates, achieve their goals. And just to back up for a second, you spoke about that there's a long sales cycle, and that's what makes it hard and capital intensive at times. But the upside, can you share once you do get in with the likes of these companies, uh, the business is very sticky and very repetitive, is it not?
Yeah, I'd like to say 100% yes, but obviously, I caveat that with I'm a bit cautious on things like that because there are obviously competitive pressures on pallets, but I like to think so from the point of view of company once they've agreed on a pallet and they're using the pallet successfully, there's less of a reason to move away from using it, and also combined with we are, like you said. We are positioned as a 100% recycled product. So given the wave of sustainability is moving towards us, if you've got a multinational that likes the pallet, they like the sustainability aspect, I think there are a few reasons to move away. We just need to keep delivering consistent quality and a good product. And there are things that can change, just to, you can have changes in packaging. So the client might change their packaging. They might then need a different size of pallet. But broadly, if things stay the same, then yes, it would be quite sticky.
Absolutely. And you said, again, using your words there about keep on delivering, the way, again, coming back to range, you have the client base now, you're looking to grow that, but obviously to meet that need, you're also looking to improve your own production, to beef up that side of the business as well. Maybe just talk a little bit about where the business is now, where you'd love to see yourself in 12 months, as far as developing your own production for, further than it is today?
Sure, absolutely. We've had a lot of production improvements and a lot of improvements in margin. We're still improving. It's always a work in progress, but we are looking to improve our capacity in washing. So we need to have more equipment and more bandwidth to be able to process more plastics. And that might be different types of plastics, but more the ability to process, more dirty plastic through into clean plastic. And that's, that will require a bit of capital in 2021. And we want to be able to, we're making a new pallet in 2021. And we want to be able to weld that pallet together. So instead of currently nailing pallets together for two-piece pallets, we're going to be welding them together, and again that requires a bit of capital, but that will make a stronger pallet, and it will make it a more efficient process. So it's all about improving efficiency in that factory to make sure we can get the most out of the factory every day.
Absolutely, and that's where I think that 180 Markets, that at least for Sean and I, what makes it so attractive is that we feel like that we're contributing growth capital as opposed to defensive capital. This is very offensive in nature, and frankly, I know that you've all spent an awful lot of time on not only the sales cycle but the product cycle, and now it's really a question of ramping that up further, and that's what it sounds like is going to take place over the next 12 to 24 months. In your mind, I suppose, what would you see as again, coming back to the next 12 months, the key catalysts, from your point of view?
Key catalysts for growth?
Yes.
So obviously it's sales. I mean, we are reliant on sales to be able to have it, to have the demand for purchasing plastic. So we have improved our reseller channels. So we are adding more resellers across Indonesia. We have a limited bandwidth of salespeople, so we are going through a reseller channel. So I think that will spur some growth compared to 2020. And then we are looking for companies to follow Unilever's lead. So we are in conversations with a lot of companies in the sort of multinational bracket, if you like, and we are hoping that those type of companies will follow Unilever's lead. And then improving margin is adding a bit of capital on the wash plant side. And then I think this trend of companies sending us waste to process, so they can improve their recovery rate of waste plastic themselves, that will be a trend that will possibly help margin in 2021, but certainly in 2022. when you have more people following Unilever's footsteps.
Absolutely. Hey, Stephen, we just try to keep these interviews short and sharp. Do you have any closing words for the audience?
Oh, gosh. I would like to say, anyone who's an investor, thank you. Really, we are a company that's fairly unique in our space for taking waste into pallets. And, we are in a growth market of logistics. Indonesia is still a growth market, I believe, from this transition from timber into plastic in the logistics space, and 100% sustainable. So anybody interested in sustainability would probably take a keen interest in following our activity. But thank you, Greg, for your time, and I appreciate the interest in our company.
Awesome. Thank you, Steve, and definitely stay in touch.
Thank you so much. All the best. Bye-bye.
Bye-bye. Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.